Have you ever wondered who really shapes the direction of the global economy? Most people focus on elections, political leaders, and headline-making decisions. Yet behind every major economic shift lies a much larger network of institutions, financial systems, markets, and incentives that influence how nations operate. Understanding these forces has become increasingly important as governments around the world face rising debt levels, technological disruption, and growing economic uncertainty. Welcome back to the channel. If you enjoy content like this, please like, subscribe, and turn on notifications. Across the developed world, governments are dealing with a challenge that has been building for decades. Public spending continues to rise while revenue growth often struggles to keep pace. As a result, many nations are operating with significant budget deficits. When expenditures consistently exceed revenues, governments must borrow money to bridge the gap. Over time, that borrowing accumulates into larger national debt burdens. The United States provides one of the most closely watched examples of this phenomenon. As the world's largest economy and issuer of the dominant reserve currency, its fiscal decisions have global implications. Investors, policymakers, and economists pay close attention to government spending patterns because they influence everything from interest rates to financial market stability. Yet the story is far more complex than simple political decision-making. Modern governments operate within a framework that includes central banks, financial markets, institutional investors, international trade relationships, and regulatory bodies. These interconnected systems often limit how quickly governments can change course. Even when elected officials promise major reforms, economic realities can shape what is ultimately possible. This has led some observers to argue that the most influential decisions are not always made in front of television cameras. Rather, they suggest that long-term economic direction is often guided by institutions that remain relatively stable regardless of which political party is in power. Whether one agrees with this view or not, it highlights an important reality. Economic systems are influenced by far more than political leadership alone. One of the most powerful institutions within modern economies is the central banking system. Central banks play a critical role in managing inflation, overseeing monetary policy, maintaining financial stability, and influencing interest rates. Their decisions affect borrowing costs, investment activity, employment conditions, and consumer spending. Supporters argue that central banks provide stability during periods of economic stress. Critics, however, sometimes question whether these institutions have accumulated too much influence over financial markets. This debate has intensified in recent years as central banks expanded their interventions during economic crises. At the same time, another important discussion has emerged around the nature of global trade and economic security. Modern economies rely on vast networks of shipping routes, supply chains, and energy infrastructure. Goods move across oceans every day, connecting producers and consumers on an unprecedented scale. For decades, maintaining the security of major trade routes has been considered essential to global economic stability. Strategic waterways carry enormous volumes of energy resources, manufactured goods, and raw materials. Any disruption to these routes can have significant consequences for prices, supply chains, and economic growth. Energy remains particularly important in this equation. Reliable access to affordable energy supports industrial production, transportation, agriculture, and everyday consumer activity. When energy markets experience volatility, the effects can spread quickly throughout the global economy. Recent years have demonstrated how interconnected these systems have become. Geopolitical tensions, supply disruptions, and shifting trade relationships have all contributed to economic uncertainty. Governments and businesses have responded by emphasizing resilience, diversification, and domestic production capabilities. The concept of economic self-sufficiency has gained renewed attention. Many countries are seeking to reduce dependence on vulnerable supply chains while strengthening domestic industries. This trend reflects growing concerns about the risks associated with excessive concentration and external dependencies. At the same time, debates about globalization continue to evolve. Supporters highlight the efficiency, innovation, and prosperity generated by international trade. Critics point to vulnerabilities that can emerge when critical industries become overly dependent on distant suppliers. These discussions have become especially relevant as governments attempt to balance economic growth with national security considerations. Policymakers increasingly view certain industries, including energy, technology, and advanced manufacturing, as strategically important sectors requiring additional protection and investment. Another major transformation is occurring within the financial system itself. Digital technology is changing how money moves, how transactions are processed, and how assets are traded. Innovations that once seemed futuristic are rapidly becoming part of everyday financial infrastructure. One area attracting significant attention is digital currency. Around the world, central banks, financial institutions, and technology companies are exploring new forms of digital payment systems. Proponents argue that these technologies could increase efficiency, reduce costs, and improve financial access. However, concerns about privacy, surveillance, and financial autonomy have also emerged. Critics worry that highly centralized digital payment systems could create unprecedented visibility into individual transactions. These concerns have fueled debates about the balance between innovation and personal freedom. The discussion often centers on what some analysts call programmable money. Unlike traditional cash, digital currencies could theoretically include features that automate certain conditions or restrictions. While supporters view this capability as a useful technological advancement, opponents question how such systems might be governed and regulated. As with many emerging technologies, the ultimate impact will depend largely on implementation. The same tools that improve efficiency can also raise new questions about oversight, transparency, and accountability. Policymakers face the challenge of encouraging innovation while protecting individual rights and maintaining public trust. Closely related to this conversation is the growing interest in stablecoins and blockchain-based financial systems. These technologies aim to facilitate faster transactions, lower costs, and broader access to financial services. Their rapid adoption has captured the attention of both regulators and investors. Financial institutions are increasingly exploring how digital assets can integrate with traditional markets. Tokenization, in particular, has become a major topic of discussion. The basic idea involves creating digital representations of real-world assets that can be traded electronically. Supporters believe tokenization could improve liquidity, expand investment opportunities, and increase market efficiency. Assets that were previously difficult to divide or trade might become more accessible to a broader range of participants, yet significant questions remain. Legal frameworks, regulatory oversight, investor protections, and operational standards are still evolving. Financial professionals continue to debate how these systems will interact with existing markets and what safeguards will be necessary to ensure stability. Technology is also reshaping broader economic structures. Artificial intelligence, automation, advanced computing, biotechnology, and digital networks are creating opportunities that previous generations could scarcely imagine. Productivity gains could potentially transform industries and improve living standards worldwide. At the same time, these innovations raise important questions about governance and responsibility. Powerful technologies can generate tremendous benefits when used wisely. However, they can also create risks if deployed without adequate safeguards. History offers many examples of technological breakthroughs that produced both positive and negative consequences. The challenge has never been technology itself. Rather, it has been how societies choose to manage and apply these tools. This reality places increasing importance on institutions, culture, ethics, and leadership. Technological progress alone cannot guarantee positive outcomes. Long-term success depends on the values and frameworks guiding its development. As economies become more digital, questions about centralization and decentralization are likely to become even more important. Some observers envision highly integrated systems managed through large institutions and coordinated frameworks. Others advocate for more localized approaches that emphasize community resilience, distributed decision-making, and individual autonomy. Neither perspective offers a perfect solution. Centralized systems can provide scale, efficiency, and coordination. Decentralized systems can offer flexibility, resilience, and diversity. The future will likely involve a combination of both approaches. Investors, businesses, and citizens must adapt to this rapidly changing environment. Financial literacy, technological awareness, and critical thinking are becoming increasingly valuable skills. Understanding how economic systems function helps individuals make more informed decisions about savings, investments, careers, and long-term planning. One lesson that consistently emerges from economic history is the importance of adaptability. Markets change, technologies evolve, political environments shift. The individuals and organizations that succeed are often those that remain flexible while maintaining a clear understanding of fundamental principles. Another lesson is that concentration of power, whether economic, political, or technological, tends to generate debate. Healthy societies benefit from transparency, accountability, and open discussion. These conversations help ensure that innovation serves broader public interests rather than narrow objectives. The coming decades will likely bring extraordinary changes. Digital finance, artificial intelligence, biotechnology, energy innovation, and global economic restructuring could reshape daily life in profound ways. Some developments will create opportunities. Others will introduce new challenges. What remains clear is that the future is not predetermined. Economic systems are ultimately shaped by human choices. Policies, investments, institutions, and cultural values all influence the direction societies take. While large forces may appear overwhelming, individuals still play an important role through their decisions, participation, and engagement. Perhaps the most valuable approach is neither blind optimism nor excessive pessimism. Instead, it is informed awareness. By understanding how financial systems operate, staying engaged with technological developments, and evaluating information critically, people can navigate uncertainty more effectively. The debates surrounding debt, central banking, digital currencies, globalization, and technological transformation are unlikely to disappear anytime soon. In fact, they may become even more significant as the pace of change accelerates. These discussions deserve careful analysis, thoughtful debate, and evidence-based reasoning. As we move forward, the goal should not simply be to predict the future. It should be to build systems that encourage prosperity, innovation, stability, and opportunity, while preserving fundamental freedoms and accountability. Achieving that balance will require cooperation among governments, businesses, institutions, and citizens alike. The world is entering a period of remarkable transformation. Whether those changes ultimately strengthen societies or create new challenges will depend largely on the decisions made today. Understanding the forces shaping our economic future is therefore not just an academic exercise. It is an essential part of preparing for what comes next. Thank you for watching. If you found this analysis valuable, consider subscribing for more in-depth discussions on economics, finance, technology, and global trends. Let us know your thoughts in the comments below, and we look forward to seeing you in the next video.